All right, everyone, welcome back to my stock market technical analysis channel. This channel is really all dedicated about finding profitable trade ideas in the market, using the charts, using the technicals to be our guide, managing risk, and trading responsibly, obviously. So let's just get right into it. And as I go along, if you guys are finding value, one, subscribe. You have really nothing to lose there. Drop me a thumbs up. It's supposed to help the YouTube algorithm. All right. Triple Qs. All right, so this is the tech sector. And again, I prefer to really approach the markets from the tech sector first. Just in general, I like to trade the tech stocks. They move a lot more. So typically, if we can find a move or anticipate a broad market move, tech will often outperform on that move. So triple Qs, we'll just really narrow it down. I look at the hourly here. Rallied. Right now, there's some resistance. You can see we've had some reactions really right along this point there. See, it was support, resistance here, support through here. All right, now we've chopped through it, but it does prove to be a reaction point. And we're basically right there now. Really been trading there all day. 293-ish, somewhere right in there, is the range of resistance for triple Qs. If we rally beyond that, then, there's some areas to look at. One, you've got about 296.20, kind of former resistance there on the hourly chart, and then potentially the downtrend line that has been established now on this hourly all the way up there. I don't think we'll get up there. It's about 300. I'm not anticipating that, but again, that is possible, of course. So that's the upside. That's kind of the areas of resistance I'm seeing. And then if I look at the daily chart on the downside, the 200-day moving average, that's one thing we really want to key in on. That's about 290.11. We're above it as of right now. We'll see how we close the day. I suspect they're going to dump this thing into the close and close it pretty much at or near the 200-day moving average. And that's kind of where I think this is heading. Ultimately, I am looking for some more downside here in triple Qs. Looking for us to probably head down to about 279, which would be some near-term support. The one reason why I like more downside in the triple Qs is if you look at the broad market, and again, really, you can see here on the daily, here's your bear market that's really been established. Now, you had a nice clean trend line. Yes, we broke out to the trend line. I've talked about this in my videos. Broke out, held support right through here, this blue trend line. But look, we're back down there now. So that's a false breakout, failed, that's a bull trap. I suspect there's more downside. And so I'm treating the markets, pretty much the broad markets, with tech and growth stocks and all that, as sell the rip. As of right now, that's what it looks like the market's doing. So you can see even today, they rallied it right into resistance and the sellers stepped in and they're selling it down now. So sell the rip is what I'm thinking on the broad markets. You see the small caps here. Same thing on the small caps. Now on Friday, and this is kind of huge, we're getting breakdowns, more breakdowns basically. The trend line that was established on IWM is right here. This is, pretty much the entire bear market we've been in. You can see that has been resistance throughout here. We finally broke out, all right, and it broke out right in here and it tested support, held, and rallied. Okay, so that's bullish at face value, but here's the thing. So we had a really impulsive sell down. On Friday, closed pretty much at support, I'd say. I mean, that's basically support for this trend line. Today, gapping down, selling down, and below support now. So that's a new development in the small caps that didn't exist on Friday. It did exist there on the S&P 500. The S&P 500 has signaled a bull trap. Now the small caps are doing the same thing. So again, I'm anticipating more downside in the tech sector. All right, moving on. Gold. So we'll start off with gold futures. Here's gold futures, rallied really impulsively. And again, I've talked about how gold and gold miners were some of my favorite long setups. You can see, look at my gold stocks today. They're all up, pretty massively, 5% plus. Many of them, you can see this AG's up almost 12%. So they're all rallying very impulsively. There's a 7% rally in Newmont. Barrick Gold up 7%. So again, strong performers today, really outperforming just the broad market in general. Let's look at gold futures now. Gold futures rallying really on the hourly. You can see pretty much rallying into resistance. We've got some resistance right here. It's about 1916 or so. we're rallying into that resistance right now. No negative divergence on the PPO, but we do have some there on the RSI. So I suspect we're going to get some sort of a pullback here in gold. Again, from my perspective, it's by the dip in gold. Okay, so I'm looking for dips to buy into on gold. Where do we drop to? Well, there's obviously the first level of support's about 1902. They might step in right there. All right, we might dip there. Possibly could head all the way down to this somewhere down to 1864 or so. I don't know. I think there's a dip. I'll look to probably just step in and start buying that dip, earlier rather than later. But as of right now, rallying into that resistance. And then if I look at like GLD, very similar here. You can see pretty much filled this gap right here. Oh, let me grab the right tool. We filled the gap there, which is sitting at about 177.85. And that's basically where we're at right now, gap fill. So that's resistance. You can see several reactions there. So again, maybe we come down and close this gap before rallying. All right, that's a possibility. Yeah, that's what I'm looking for in gold. There's probably a minor pullback and then onward and upward. JP Morgan. So banks have obviously been at the front and center of this sell-off with some of these banks closing. JP Morgan's a major bank. They're fine. They've got cash and all that. So I don't see any risk there in terms of this thing going bankrupt, of course. But and it's too big to fail anyways. The federal government would backstop it. We played this one perfectly. As of right now, I'm kind of just flat this thing. I took my profit this morning. So again, we saw the breakout, the drop, the sell signal really came there. We dropped all the way down to our 129 support area. This is where I flipped long and rallied it up. My point of resistance was about 133.50. We overshot that just briefly, but again, reverse short there for a move back down to 129, and you can see basically we gapped down pretty close to there. This morning, I covered and took my profit on that short, and I'm no longer in the position. You can see it's kind of just, it's consolidating. So we're going to give this one a little room and just look for other opportunities. But you can see, in general, it was a 5-6% drop down to that first target. Then we rallied up for another 3.5% gain. Then we shorted it now for another 3%. So roughly 10-11% gain in a matter of just a few days. Pretty good play on that. Healthcare, so Merck and LOI have been the two I've really been looking at. LOI, you can see, kind of put in a little base of support with some bullish divergence here on the daily. Okay, so it kind of is setting up for a rally. It did rally right into the 200-day, and it was rejected right there. So again, I still think it's sell the rip, and that's really across most of the markets, except for gold. I'm looking at buy the dip across, in the gold miners, sell the rip in the broad markets, but yeah, sure enough, rally into resistance and it gets sold into. MRK. This one gapped down this morning, I believe, and then kind of rallied up and then has since sold off. So, again, it's just being sold. The rallies are getting sold into. Here's the hourly chart. You can see gap down, rallied up the first hour of the day, and the seller stepped in the rest of the day and sold it down. So that's pretty common of bear markets, to see maybe a rally in the morning and then they sell it the rest of the day. So you kind of suck in some longs early in the morning and then just take your profit and sell it down the rest of the day, and that's what we've seen so far. So Merck's below this support zone about resistance about 106.10, and I think the next stop is down here, probably tomorrow, but 102.75. Minor bounce there is likely, but I do think we are ultimately going to break that and head down to the 200-day, down about 98.11, down to about 95. This is my range of support, kind of our profit target on this one. Again, this one has been, it was foretold by this negative divergence on the daily chart, and we had a nice clean sell signal right there, big red candle. Guys, if you're interested in learning this as a skill set, check out my stock market technical analysis course. I put together all the concepts that I really go through, giving you guys a breakdown checklist on what to look for high probability setups, how to manage risk, and how to read the charts, what to look for. All that is in my course. Link in the description below. And then finally, if you're interested in in the private member group, $5 a month. You really have very limited to lose. You can quit anytime. I give additional market insights, additional trade ideas in there. I'm mostly been communicating to that private member group throughout the day, and then doing my end of the day videos for the broad market subscribers of the YouTube channel. So if you're interested in getting some more additional insight, join up. Link in the description below on both those products. Check it out if interested. There's a lot of value in there. Exxon Mobil, this is oil. So oil, I've got Exxon at support basically today. You can see here support, there's another reaction, there's a third, and right there, really just kind of hitting that trend line support and bouncing off of that. So support there. We do have negative divergence. That's really been building for a while, but even if I get rid of this one and you look right here, you can see there's some negative divergence on oil. So I think this is likely going to break down sooner than later. There's your last divergent high. There's another divergent high, and those were your last divergent highs. We've now pulled back the trendline support. Is that enough to satisfy the negative divergence? I don't think so, but again, we don't have a sell signal, so this can rally. It can continue to rally. We need to see a break of the trend line. The 200 days right below it, so we need to probably see those both get taken out. And if we do that, then we probably have a setup for a decent size swing trade to the downside. So there's also horizontal support about 103.56. So something I'm keying in on. No sell signal, but we'll just keep an eye on it. Let's go ahead and look at the Fangs and I'll wrap up. Microsoft rallying right into resistance. You can see here on this daily chart, you've got this downward trend line. Okay, this is your bear market in Microsoft. We overshot it for a few days, but we failed. All right, false breakout, bull trap right there. Failed, rallied into resistance, failed. Today, rallied into resistance, and so far, we're just at resistance. So I suspect we'll get rejected here and start to sell down again, and that's kind of what I'm looking at on that one. Let's go over to Apple, kind of the big boy. Apple's still kind of at support. Now we do have some resistance. It looks like it's right about there at about 150, 135, and we're pretty much right there now. So very similar, just rallying into resistance, and so far just sitting there looking to be rejected. There's also a trend line to watch on Apple. So you've got support, and another reaction there. So that's 3. We'll watch that trend line for a potential kind of a bigger sell signal. When Apple breaks this trend, the Qs will drop, okay? Apple's too big of a player, and the market will drop in general. It's just such a heavy weighted stock. So we'll watch that. I think it's coming in the near future, but yeah. Okay, and those are really the two that have kind of the most developments. The others, Google and Amazon, there's not really a whole lot of change today from yesterday or from Friday. So, okay, guys, I'm going to wrap it up here, get this one out there. Catch you on the next one. Bye.